Hi, y'all. Welcome back to 101 Tailored Tax Tips. This is tip number 32. Hold your stock options or restricted stock units, RSUs, for longer than a year. Why? Because when you do so, you reduce the tax rate at which the value of those stock options or RSUs will be taxed at. If you're highly paid and highly taxed like I am, you most likely at the 37% tax bracket. So if you don't hold your stock options or restricted stock units for longer than a year, then you're going to pay taxes at 37%. Whereas if you hold your stock options or RSUs for longer than a year, you're going to pay taxes at 20%, which is the long-term capital gains tax rate for those of us in the 37% tax bracket. So right there, you save 17% on taxes. And if you don't hold the stock options or RSUs for longer than a year, then the company gets a tax deduction based on the amount of, or tied to the amount of money that you receive when you sell your stock options or RSUs in less than a year. In my case, had I known this when I was at Google, I would have saved a shit ton of money in taxes, because I ended up selling most of my RSUs, or my GSUs as Google called them, Google stock units, before the year was up. I ended up paying taxes at the time at 35% tax bracket, because President Trump's tax cut for 2017 had reduced the highest rate at 35%. President Biden has put it back up to 37%, but you get the picture. So I would have actually saved 15% on taxes, but unfortunately I didn't know this. So hopefully, now that you know this, you would think about how to set yourself up in a way that allows you to hold on to your stock options or stock units for a year or more, so you can benefit from long-term capital gains taxes as opposed to paying ordinary income taxes. All right, y'all. So if you've liked this video, please smash that thumbs up button and subscribe to the channel. If you think this video would benefit someone, please share the video. And here comes my disclaimer. I share these tax tips based on my education, my experience, and my expertise in managing my personal tax affairs. And if you would like to use this tip and think you would benefit from it, please consult. Actually, you must consult with a tax professional to see whether this tax tip would be useful and beneficial given your unique circumstances. All right, y'all. See you soon.